here. Yeah. Oh, yeah. Let's put that there. Let's take this and share my screen. Futures up here. Say hello to everybody. Good morning, everybody. Good morning, good morning, good morning. Happy Monday, fun day. I hope everybody's doing well. Let me just say hello to everybody before we begin. You guys just missed Bonnie. My assistant was just here helping me out. Let's say hello to everybody. We got JB, we got Armolfo, we got Glenn, we got Dave, Colleen, Devin, Vertuvian, Timothy, CJ, Alan, Dr. Serena. Good morning, Dr. Serena. Hope you had a good weekend. Ricky, Ivano, Art, Wade, Penny. Good morning, Edgar, Deanna. Yeah, here's that monitor we were talking about, Penny. It's made by KYY. KYY. It's great, but I think the deal you got at Costco for the Acer is a good deal. Just make sure it's not too big. Edgar, Deanna, good morning. Nestor, Richard, Robert, Ray, good morning, Mark. How are ya? Omar, Ricky, Victor, Stacy, the sassy trainers here. We got a lot of people here. I'm losing track here. Ooh, a lot of people. Stephen, Robert, Mark, Ed, Eduardo, Darren, Susan, Dave, Walter, Samson, John, Randy, Kevin, Ben, good morning, good morning, good morning. Good morning. Yes, William, I hope you enjoyed your weekend too. To a profitable week, absolutely. Hope it's nice and warm in Miami. Anil, Rosalind, Tom, Ali, good morning, Ali. Good to see you here. Blair, Michael, Gustavo, Todd. We got a lot of people here. Richard, good morning, Richard. Eagle Beagle is in the house. Scott, Richard from Puerto Gorda, Robert, Dave, Stephen, Dom, Robert, Vernon, Rebecca, Benjamin, Ray, Addison, Scampy, Rice, Lewis, Chris, Terry, Moondog is in the house. Genevieve, Naples fan, Harry, Roddy, Kim, Dave. Good morning. Yes, thank you so much for those notes, Carlos. They were very much appreciated by everybody. There's only one change that needs to be made there. It says not to do anything for the first hour. It's actually not do anything for the first half hour, okay? So I think it says somewhere there to start at about 10:30. It's actually 10 o'clock. So the only change that you want to make there is half hour. Somebody sent me an email. I didn't want to bother over the weekend. But thank you, Art, for sending me that little update. We got a lot of people here already. Kim, Roddy, Dave, Henry, Frankie, Charlie, Michael, Tony, Robert, Dylan, and JB. Good morning, good morning, good morning, everybody. Let me give you a link to my VIP room, which will be at noon today. I'll be doing some educational stuff there. It'll be fun. I will also be doing a 10-minute class at the end of this session for all of us. I'll speed up a little bit because we had so many people wanting to get into that turning point, that 1 month special I gave. We sold like a record number of them for, I gave you guys $97 for a month. So they want me to do that again before we leave. So we'll do that very, very quickly. Good morning, everybody. Good morning, Cam. Good morning, Stacy. And if I missed somebody here, please, I apologize. There's hundreds of people's names going through. So I'm not trying to be a pain in the ass or anything like that. First full week of New Year's. Yes, first full week of New Year's without any holidays or anything like that. A Heacock fan, Stacy, Jesse, Mike, Anthony, Bugs, Keonk, Cam. Big week for bank stocks. And the big question is going to be whether there's loan defaults. You probably want to write that down. In addition, you probably want to collect this link that I'm about to post for you right here. Yeah, that's right. These links are earnings. And you can see here, we don't have anything today. We don't have anything tomorrow. but we start hot and heavy on Wednesday. Okay, and I started giving you guys some numbers last week, end of last week, for the banking sector. So that should be helpful. As far as the LA fires, I'm really, really sorry for anybody that's going through it. I've been watching the news all weekend. One of my closest childhood friends' he's within 1,000 feet right now of his house being burned for the last 24 hours. He's literally at the edge of Encino, south of the boulevard there, right off of the 405. So it's my mom's best friend. His son and me are very close friends. It's really a tough time. So it's been a very stressful weekend. Cam, they're not going to be they'll be well, each company will say whether loan defaults are getting. It'll be in their forward statements, Cam. Yeah, it's just one thing, Carlos. It's just one thing so far. It's just not 10:30, but 10 o'clock. It's not a big deal. Actually, it's nothing wrong with waiting till 10:30 either. You're not going to be late to the party, I promise you. But technically, we wait till 10 o'clock. Hey, Peter. Hey, Kevin. So yeah, we're looking to see if they're not going to be published directly, but they're going to be talked about extensively. Loan defaults is one of the biggest things banks look at. So Bank of America, USB, Morgan Stanley, Wells Fargo, JP Morgan, bank default, the default rate, whether defaults are starting to increase, whether it's troublesome or it's just, standard number of, because of interest rates, right? So that'll be there. All right. And everybody except Carla, thank you for giving me a thumbs up. Carla, you don't have to give me a thumbs up ever. Don't worry about it. You're exempt. But I appreciate everybody giving me a thumbs up. Thank you so much for doing that, folks. All right. As far as Fed data this week, we got the PPI. This is going to be a big report. This is a big report. And this report will obviously put egg on the Fed's face. Oh, inflation's getting bigger, better. Yeah, no, it's not. You'll see it tomorrow in the PPI. Matter of fact, let's take a little peek here. Look at. Okay, so right away, a year ago, year over year, 3.4. Look what their consensus is. The consensus is telling us they're not expecting anything better. The consensus is telling us they're expecting exactly what it was a year ago. How about year to year, the regular number? It was 3% last year. It's 3.3% expectation. I'm going to ask you guys a really stupid question. Is 3.3 lower than 3? No, it's not. So I'm going to ask you another stupid question. If producers are paying more for goods than they were paying a year ago, do you think they're going to be nice and give us a nice New Year's gift and absorb those prices, or do you think they're going to pass it on to the consumer? I asked you 3 questions that have nothing to do with the stock market. This is a math question, this is a logic question, and the last is just a common sense question. And unfortunately, the answer to all of those questions is hell no. 3.3 is not lower than 3. Producers are going to pass it on to the consumer. Okay? So it's just how it is, guys. It's just how it is. Don't hate the reporter. And then we have X Food and Energy Service. They're not even reporting, but this is what I'm looking at here, guys. I'm looking for these numbers right here, year over year. I'm not looking for anything. If it doesn't have a year next to it, I don't care. It doesn't matter. It'll be revised anyway. Oh, I'm glad Bonnie left, that he doesn't have to hear this. If he hears that cat food prices are going up, he's going to be very upset. So again, the expectations are already baked in to be as bad or worse than last year. I'm just showing you what's on the table. And again, don't hate me for telling you this. I'm showing you what the numbers are. How about CPI? Oh, let's look at the CPI. All right. Well, here you go. Year over year, 3.3, 3.3. Regular, 2.7 versus 2.9. Does that look like they're expecting anything better? That's your consumer price index. How about I ask you this question? Are you seeing anything cheaper at the supermarket? Unfortunately, the answer is again, hell no. And now we have an employment report last week with twice as many people getting jobs. Is there any reason for the Fed to lower rates? No. Was there any reason for Fed to lower rates? No. Did they lower rates? 3/4 of a basis points, those rascals. Meanwhile, the kid has left the house. He's afraid. He's afraid that the parents are going to take that bike back. All right, so not good, not good at all. Earnings, I already told you the big is going to be financials. There'll be, Taiwan Semiconductor and a couple of others, but the big factor we're going to look at is earnings. Okay, how about commodities? Well, gold is at that crucial level. What do I mean by crucial level? I drew a trend line here for you guys. Oh, by the way, the other big report is going to be retail sales. Sorry, I forgot to get into that. Why would prices come down? What goes up does not come down. Yeah, that's true. So you see retail sales, that's another big report, and then industrial production and housing permits. But I fear that by the time we get to Friday, price discovery won't be that big of a deal. But there's a pretty big report pretty much every day except today. And as you guys know, Monday typically is a rotation day, especially after a big move that we had on Friday. Okay. Now, I don't know if that's going to happen or not, but I'm telling you, typically we have consolidation after a big move. I don't know the ratio of that, but that's typical. Monday, big day on Friday. Typically you have a rotation on Monday. Typically. And you also don't have any Fed data coming out today, and you don't really have any earnings coming out today. So the only catalyst you would have is overnight markets and just the sentiment. Excuse me. Wait till I get to sentiment. Gold. Gold is rising. This is our first trend line. This is where we anticipated it was going to get. Let me just drink some water here. This is where we anticipated it was going to get. This is all bets off level here. Till we get to 27.85, I don't really see a reason to buy, especially with the US dollar making all-time highs. So to me, thank you, Michael. So to me, I wouldn't be buying this. The only reason I believe this is up right now is because we're seeing some sell-off in the stock market and investors are putting their money into safety. But this does not look like a very strong trend to me. And right now, we're already seeing us down almost 1%, or 0.75%. So thanks. Thanks, Kevin. I appreciate it. Oh, these feds, they're giving me it's not good. Crude oil is going up, but crude oil is going up because of fundamental data. Remember what I told you? I told you all bets off crude oil till we get to this level. We're now above this level. And if I see a crude oil stock that looks ultra strong, I would be buying it. So far, I don't have anything on my radar yet, but I do like this breakout. It is fundamentally based, and we will be talking about it. But hey, Gustavo. Oh, speaking of Gustavo, let me give you a link. I got overexcited. Let me give you the link to the Customer Service Live, the Cam or Gustavo show, from 10 a.m. to 1 p.m. every day. Don't miss out. And here's the link to my VIP room, where we'll be having some fun today at noon, and I have a lot to talk about. I always have a lot to talk about. My watch is slow. I gotta reset it. That's one thing about these watches. You don't wear them for 2 days. They stop working. So US dollar, this is very bad, folks. This is very inflationary. I hope you guys realize the US dollar going up is very inflationary. And if you look back, this is when I think the Fed started lowering them around right here. The US dollar just went straight up. Why? The bond market. The bond market keeps making all-time lows. This is the long bond. Very bad. This isn't going to help gold in the long run. My suggestion is to be careful of gold and really wait till we get above this level, because this can be just a trap right here. And remember what I told you on a weekly basis? It looks like a descending triangle here. Curses. See right here? It's just a descending triangle right here. Can just continue breaking lower and lower and lower. So be careful that this isn't the high, especially with the US dollar breaking down. I mean, with the bond market being here and the US dollar being here. Do like crude oil. If I see something related to the energy, I would buy it right now. Okay? Because we do have this. We do have this. Hey, Gustavo, I hope you had a nice weekend. Hope you had a nice weekend. And you too, Cam. I hope you guys cooked something delicious this weekend. Cam always cooks up something good. I love it. Love it, love it, love it. By the way, look at volume on crude oil last week. Just look at the volume. This is meaningful here. But again, I want to see stocks that cooperate. Okay. All right. Let's put everything together and then we'll talk about volatility. Because the reason I'm rushing through the commodities is because I have so much to talk about with the stock market today in terms of internals. As you guys can see here, stocks are. So starting off, we're down 200 points on the NASDAQ. We're down 74 points on the Dow. Now, I got a couple of emails. Not that many, maybe one or two. Actually, I don't think I got any emails. I think customer service got a couple of emails. And Chip said to me that people are asking, how come you're not putting trades in? How come you're not putting trades in? I want to ask you a question, guys. Did any of your long guru recommendations from anybody else make money in the last 2 weeks? No, no. Maybe ours did. Maybe a couple of ours did. But let me show you something. I want to show you guys something. This price action right here is virtually impossible to make. Maybe if you're in the pit, but otherwise, because we're very short term, but otherwise, it's not possible to make money in the long side here. Well, Roger, of course it's not. Why didn't you trade short? Duh. Well, I hate to say this to you guys, but we were abutting the 100-day moving average. That's strong support. So January is also seasonally a very strong month for the stock market. So you want me to trade against seasonality and against technicals and against momentum levels? Oh, momentum levels. I forgot to mention momentum levels. Bingo. I hate to say I told you so, but do you guys remember me telling you that if this goes below 50%, we're in a bear market? Does anybody remember, or is this the first time you're hearing this? I've only been saying, remember the car going around the track, moving faster, but internally it's going, and I said a little bit more and it's going to break down. Does anybody remember me saying if this goes below 50, we're in a bear market? Let's see. We got a delay here for about 20 seconds here. No, I didn't say be careful. I said specifically if we're below 50% here, we're in a bear market. I didn't say be careful. Be careful is a very, very broad word. I was very specific, saying that if we break below 50, we're in a bear market. Yeah, he said it about 100 times. Thank you, Mark. Yeah, I just want to be specific here. Folks, let's be specific. It's going down. That's very, very general. Be careful. Be careful. Yeah, be careful. Yeah, that's going to help you make a lot of money. Be careful. Folks, I hate to tell you this, and I know Wall Street is not telling you this right now, but any stock over $2 that's been trading for 6 months, we're below the 200-day moving average. What? We're in a bear market? I never got the memo. I didn't hear that from Wall Street. Folks, the definition of a bear market is when you have less than 50% of stocks trading below the 200-day moving average. Yep. Remember when we got to 51 earlier in the year and I said it's going to break? So now we have permission to trade to the short side. Now that we broke the 100-day moving average, now we could break to the short side. Now that QQQ broke the 50-day moving average on Friday, we could now trade to the short side. Why would I trade to the short side right here when we're abutting the 50-day moving average? So congratulations, we are officially, even though Wall Street's not telling you that, we're officially in a bear market. Watch, I'm going to get 15 people arguing with me right now. I hope I have put so little trade since mid-December. And aren't you thankful that you did, Richard? Aren't you glad you did? Yeah, I've been saying it all right. Yeah, I didn't say be careful. I said I said if 50% of this is less than 50%, we're in a bear market. Guess what? We're in a bear market. So let's look at the S&P. Ta-da! We're in a bear market on the S&P 500, folks. What? Does anybody want to argue with me right now? Does anybody want to argue? We have 458 people. Does anybody want to argue with me right now? Let me know. Let me know if you want to argue with me. Because if you want to argue with me, just look right here. 49%. How about the Russell 1,000, 2,000, 3,000? 46%, 43%, and right at 50. Right at 50. Okay? Why haven't you been giving us trades, Roger? Because I'm trying to protect you from yourself. That's why. How about the NASDAQ? Well, the NASDAQ is not there yet. We're only 2% away here and 4% away here. No, it doesn't look good out there. And yes, I've been saying this for a very, very long time now. This really bothers me. This really bothers me. 46% below 200, any stock over $2. Because basically what it's telling us, nothing is looking good. Nothing is looking good. Not NASDAQ, not the Dow. The Dow's looking better. I mean, it's 30 stocks, but look at 50%, 17. Look how much red you're seeing here. This is officially a bear market. Okay? All right, let's continue. What about volatility? What did I tell you about volatility? If we break this level, the market's going to break down. What did the market do on Friday? It broke down. The question now is this going to fade? And are we going to now close the gap because it's Monday? That's what we're going to be watching for right now. You're going to be watching whether or not this breaks down or starts going up after the market opens, okay? And remember, you don't have a lot of Fed data today, so there's a good chance this will come down and the bond market will cool up a little bit like we're doing right now and give us some consolidation. How long this bear market would last for? Anil, how long will this bear market last for? Do I look like I can predict the future to you? Do I look like I have a time back machine to you? Anil, my prediction ability is about as good as yours. Okay? I don't predict anything. I confirm. I'm just telling you everything based on how it's looking that day. So you're going to keep an eye on this trend right here. You're going to keep an eye on this trend right here. And we basically need to break this trend line. We need to break this trend line. So we need to break below 18. So you're going to keep an eye on $ VIX and whether or not we're going to break lower or we're going to go above 22 today. You're going to keep an eye on bonds and see if this breaks lower. You're going to keep an eye on the US dollar and see if it takes out higher. The higher this goes, the worse it is for the stock market. Yeah, I have a crystal ball. I'll let you borrow it, Anil, if you want. All right. Now, what about number of stocks making 90-day lows? Let's take a look here. Hey, we're familiar with this number, 517. Starting to bottom out. What happens when these numbers get above 500? We start consolidating. We start pulling back. Remember, 500 is the threshold. We're at 500 right now. And we're breaking key levels. And we're breaking key levels. And folks, this is the 200-day moving average. This is the 200-day moving average right here. Let me delete this. That's the 200-day moving average right there. Yeah, my crystal ball is made in China. That's right. All right, so let's put everything together right now. Let's put everything together, and then we'll go over the technicals. So Nasdaq is down 1.25 point this morning as Treasury yield continues to rise. Don't say I didn't warn you about that one. Start of the fourth quarter earnings season later this week. I gave you this, and for anybody who's coming in here right now, here is the link for this. These are the biggest players. Based on your past experience, what would confirm that we would be out of a bear market when the? Oh, that's easy, Anil. I'll talk about that in a minute. I talk about that every day, but I'll talk about that. I'll talk about that. That I could tell you. So let's continue this. I'll answer your question in just a minute intelligently. That I could help you with. Wall Street's monthly averages closed lower with the NASDAQ and the blue chips dropping to a 2-month low and tech-heavy NASDAQ falling to a 6-week low. Notice RSP's not really going down all that much. So they're starting to come together. Here, I'll show you what I mean. And yes, I remember somebody in the morning that looks like me telling you that will happen. See how they're starting, how this is now close to the 200. It's not up here. One is not up here and the other one's down here. See, look at this. They're not that far off of each other now. See that? One is here and one is here. They're not that far off of each other, which means mags are starting to come down, as you could see. The more they come down, the more equalization we will have between the SPY and the RSP. Do you guys remember me telling you that over the next couple of months, they'll equalize each other as this comes down? Do you guys remember? Yeah, Clyde, I didn't tell you any of it. Clyde told you all of this. Right. Wink, wink. Exactly. Clyde. Yes. Semiconductors took a big bath on Friday. Remember that big candle, that engulfing candle that we had on Thursday? That was a big clue. And look, they're down 2% this morning. This was a big FU to the 265 level, which we drew 5 months ago. AMD is down hard this morning. On semiconductors is down this morning. We're not going to have a fun time on chip stocks. When there's no fun in chip stocks, there's no fun in tech stocks. Friday, non-farm payroll jumped to 256,000, showing that employment is very strong and that reinforcing the fact that the Feds are a bunch of morons who had absolutely no business lowering rates twice. University of Michigan sentiment fell, not a big surprise. There's now a 97% chance that the Fed is not going to take any action. I'm curious to know what the odds are of them raising rates. We've got bank stocks and Taiwan Semiconductor and SLB reporting this week. We got PPI, CPI, retail sales, core retail sales. Those are the two things that I've been telling you guys about nonstop. The Fed is going to release their beige book this week. Do you guys know when it's happening? I don't see it. Oh, here it is, Wednesday. Okay, Wednesday. We have a lot of Fed data, but this is going to take the wind out of the market, the CPI. And remember, it's already expected, it's already priced in to be worse than a year ago. Can't make this stuff up if you tried. Europe is down. They're not giving us any tailwind. China's going to be a big factor right now. Concerns over the state of the global economy, technology and industrial stocks led the decline on Monday. Energy stocks outperformed. Yes, of course. Excuse me. China closed lower, starting a new week on a downbeat note despite stronger than expected trade data. Home appliances and telecom stocks led the decline on Monday. Not good. Speaking of China, let's take a quick look here. You see this right here? Look at Caesars. Look at Caesars. Look at China. Look at China and look at Caesars. They look almost identical. Yes. Yeah. And the fact that their real estate sector is just doing horrific, Cam. Just horrific. Okay. I just wanted to show you that China is not helping us at all, at all. Pre-market, Tesla fell 2%. It's not regulatory credit sales are at risk from President Trump's policies. That's one of the downside of connecting yourself with the president. If things are looking good, then your stock goes up. If things are looking bad, then your stock is going down. I don't know how long they're going to be friends for, but I'm bullish on Tesla for as long as Trump and Musk stay friends. I don't like the company. I don't like Musk. I didn't like him before the election. It has absolutely nothing to do with politics. It has to do with the fact that he takes on way too much, and I think mentally he's not 100%. And again, it has nothing to do with politics. It has to do with the fact that I think he's driving one too many buses. That's all I think it is. I don't think you can manage all these Fortune 500 companies effectively. Okay, I just don't think you can. Maybe I'm wrong, but everybody has an opinion. But again, my opinion of him is nothing to do with politics. It has to do with him as a businessman. I just think he takes way too much, and he doesn't have a problem lying and manipulating numbers and telling us that Tesla's going to come out with a cheap car to boost his earnings when they have absolutely no plans on coming out with any kind of car whatsoever. I just don't like loose and fast talks from CEOs like that. Okay, so again, it's just a personal thing. It's a personal opinion that I have. It's not political. And again, it has to do with the fact that he's managing three major companies. Energy stocks are seeing some upside, which is great. But again, most of these are in a major downtrend right now. So only find energy stocks that are really doing well. We don't really trade pin interest or STM very much, but both of them got downgraded, which is not really going to help the market. Remember, these third-party downgrades mean absolutely nothing, and they can also be impacting the stock. They could also be downgrading them based on earnings expectations from a year down the road. Typically, these earnings downgrades and upgrades are good for about 2 to 4 days, and then the stock reverts back to what it was doing. Don't confuse a company downgrading themselves with a third party downgrading them. I can downgrade pin interest right now too. Does it mean anything? No. Yeah. I just, look, everybody has someone that they like, and some people like Steve Jobs, some people didn't like Steve Jobs, some people like Bill Gates, some people didn't like Bill Gates. I don't really have any strong opinions about them, but I do have a strong opinion about Musk, and I think he's brilliant, but I think he's just as brilliant as he is. He's got some issues. That's all. It's a free speech world. I have a right to my opinion. But it doesn't mean I'm bearish on his stock. I'm bullish on his stock as long as he's buddies with the president. So again, take that for what it's worth. All right, now let's go through some analysis. SMH. Oh, yeah. We're right at the 200-day moving average. Look at this, Cam. We're at the 200-day moving average. We're literally at the 200-day moving average. Okay. Pin downgraded from hold to buy. Did it get what? Hold to buy. Hold on. To hold from a buy. Dave, they downgraded it to a hold from a buy. If they did what you said, that would be kind of funny, wouldn't it? All right, let me give you a link to Customer Service Live. Oh, there's links here. All right, I'll be live at 10 a.m. with stealth surges. Here's a link for that. I'll be live at noon. VIP room right here. Here's a link for that. And let me give you Customer Service Live. All right. And by the way, folks, if you happen to see T-Buzz today, wish him a happy birthday. It's T-Buzz's birthday today. All right. There's Customer Service Live. And remember, if you see T-Buzz, wish him a happy birthday, okay? Tell him that Roger spilled the beans. All right. In terms of the overall market, we're going to be watching volatility levels very, very closely to see if after the first hour, this starts coming down. The VIX, $VIX, starts coming down. Very, very, very important today. Very, 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 very important today. We want to see if this starts coming down. And by the way, folks, how about a thumbs up? Let's give Uncle Roger a thumbs up. Thank you so much for doing that. So we'll keep an eye on that. As far as RSP, Be very, very, very cautious here. Be very, very cautious here. We're approaching the 200-day moving average. Typically, when we approach the 200-day moving average, we bounce. Also, honestly, I think this is going to hold on a lot better because it's been holding on a lot better the last couple of days because we've been seeing a sell-off in the mega caps. So I think this will hold. If this doesn't hold, the dam is going to break loose. As far as the SPY is concerned, as far as the SPY is concerned, we are already below the 100-day moving average. We have clearance here to the 200-day moving average. Yes, this is something I would be trading to the short side, possibly. QQQ. We are now below the 50-day moving average and between the 100 and the 50. We're pinched here, and the question is, are we going to break this? Are we going to come up here, or are we going to stay here for the foreseeable future? We don't have stability in the market right now, folks. But we have a bunch of stocks that are overdone. So I think today we may see a consolidation. Remember, I treat Mondays like Fridays. Mondays for me are like Fridays for most people. Okay? I treat Mondays and Fridays very, very similarly. I'm actually more active on Fridays than I am on Mondays. So to me, this is like a third day of the weekend, okay? It's like the end of the week. Mondays, after a big day, not expecting a lot. Mega caps. We're at the 50-day moving average. Now, folks, I'm going to make a little prediction. Yep, he's turning 18. Eagle Beagle, he's turning 18. T-Buzz is great. Anyways, if we break this, we're in deep doo-doo. Why, Roger? Well, because the Magnificent Seven have a market cap of 53% or 54% of the stock market. So we could either consolidate and come up, which I believe we're going to do because it's Friday. I don't think we're going to break key levels because it's Monday. I don't think we're going to break key levels on a Monday. And this is where we're at right now with the market already being down 200%, 200 points on the NASDAQ. Also notice the Dow is not really down much. This is randomness right here. The NASDAQ is down a lot, but the Dow is not. It's not, okay? So I think outside of the chip stocks, we're not going to see that bad of a sell-off. Let's look at least in the morning. We're at the 200-day moving average on IWM. We are literally, this asset right here is actually representing the same thing that I'm showing you. This is very interesting because you see the chart right here? See this chart right here? See how we're right at the 200-day moving average? That's what this is telling us. That's what this is telling us. See, 49%? If you strip away the market cap, this is where the S&P is right now, the 200-day. That's not bullish at all. Now, again, what do we have moving in our favor? Well, we have a few things. We have the fact that possibly we can consolidate here. If we consolidate, we're a little bullish on the 10. I'm stretching right now. Okay, like I'm hoping for this. We got a little bit of a reprieve here. We have a little bit of a reprieve here. We have 500 stocks breaking down, which is quite a bit. We have, 1 second. And if you want if you want to see the VIX the same way I'm looking at it on a 4-hour, on a 2 months, just so I could see all the points. And what I'm looking for and I'm hoping for is today we start coming down. We start filling this gap right here. Okay. Is there any general economic factors info causing the drop, or is the drop completely Martin, there's nothing random about this drop, and I've been talking about it for the last few weeks. There's trouble in the Middle East. Earnings expectations are starting to come down. Technically, the stock market is looking like crap. China's in the crapper. Europe is in the crapper. And a bunch of companies are coming out with downgrades. So it's not random at all. And it's been coming a long time. Martin, I think you're new here. If you're asking me that question, you must be pretty new here. I mean, look at the bond market. Why wouldn't the stock market be doing exactly what it's doing right now? It has 73% correlation to the bond, to TLT as of Friday. So there's absolutely nothing. This is not a surprise at all. And by the way, when the Fed's lowered rates here, when myself and Donald Trump said they're making a huge mistake? What happened when they lowered rates? They were expecting this to go up here, but instead we went down here, which means yield has been going straight up. Yay! Nice. Thank you, Dr. Serena. Bitcoin. Let's take a look at Bitcoin. Let's look at Bitcoin real quick. Right at the 50-day moving average. And by the way, there's more and more correlation with technology with Bitcoin, as I've been telling you now, more and more. This is no good. And if we break down, it's going to take Bitcoin down. Please, please, please wait till we're above all of these VWAPs and all of these averages right here. And by the way, there's nothing that I'm telling you right now that should be a surprise to you. Stacy says, also, do you think investors are pulling their money out of the market to put into other higher interest accounts? They're starting to, Stacy. So far, they've taken money out of one tech sector and put them into another, but it could happen. What I would watch, Stacy, what I would be doing, if you want to know a good answer to that question, is keep an eye on gold. And if gold keeps going up with interest rates and US dollar going higher, then people are taking their money out of stocks and putting it into gold. But I'm not really seeing much evidence of that yet. Yeah. Yeah. Now, if you all want all of this to go away, all you've got to do is do exactly what Powell told us to do. Inflation is going to go lower. Inflation is going to go lower. Egg prices are going to get cheaper. Egg prices are going to get cheaper. Inflation's going to go lower. Powell said if we all do that, things will get better. So he did. I know I almost fell off my chair, but he did. Thank you for reminding us, Carlos. We have to, yes, and Rich, yes, we have to, if we all sit there and say inflation will get lower, it'll get lower. Yes, he did say that. He did say that. I almost fell off my chair, but he did say that. Can you believe the head of the Fed actually said that, guys? He did say that. He did. I should make a loop of that. So if you see the US, if you see the gold market going higher with everything relating to the stock market continuing to deteriorate, then money's starting to move into gold. I'm not starting to see money coming into Bitcoin. And what I told you, if you trade crypto, I want you to remember what I said. Crypto is becoming an efficient asset, which means it's going to become more correlated with technology. It's not a rebel like it used to be, where it was like its own little island. People are now starting to put it into mutual funds, hedge funds. It's starting to become more correlated with technology. Now, what about sectors? Let me see where we're at. What about sectors? How are sectors doing? Let's look at sectors. Let's see if we have a meaningful directional bias here. Energy, healthcare, very defensive here. Semiconductors, Basic materials, industrial, and then consumer discretionary, and then retail. No. And then mid caps next to QQQ. No. Consumer staples down here next to Russell 2000. Oh, yeah, absolutely. I'm being really sarcastic right now. So you could see here, technology communication, while QQQ is up here, while semiconductors are up here, healthcare and consumer staples are really close to each other, as you could see. Healthcare is up here, consumer staples is here. Financials are nowhere near retail. So I'm good, and Bitcoin is all the way at the bottom. Let's just say this is about as mixed up can be. All right. So expect. Oh, and then there's tariff. Oh yeah. I forgot about the. Yes, I'm sorry, but tariffs. That's another thing. Tariffs. I'm fearful of using the word tariff here because I'm afraid that people are going to start curse me. Remember the first time I mentioned tariffs? People, what? Tariffs? It's not going to happen. He's just talking about. Well, he's still talking about it. It's still making an impact on the global markets. The frickin' head of the Canadian president couldn't handle it. He had a nervous breakdown as a result. And look at Mexico. And look at China. And look at Russia. So no. I don't know what's going to happen with tariffs, but the market is taking it very seriously. The global market's taking. That's the other thing. Thanks for bringing it up. Manage. I've been thinking about that as well. Yeah. So yeah, tariffs. And yeah, I don't want to hear about it. I don't want to hear how it's. I don't want people giving me a lecture on economy. I don't want to hear it. My ex-partner is the senior financial economist to our country. So please, I don't want to hear any of that. I've heard it all. Trust me. People are taking tariffs very seriously. Okay. Yeah, tariffs are inflationary. Oh, the Greenland talk. Don't give me heartburn. All right, so let me give you stocks that I like. I want to give you stocks that I like, and then I'm going to give you a nice little presentation. It'll be 5 minutes long. So this is bad, folks. So what are you going to be watching today? Well, what I'm hoping today is going to happen is that see how the Dow is barely down? We're going to have a fragmented market today, I believe. Also, I don't think the S&P is going to see that much more downside beyond this. Today is Monday. Mondays are typically rotation days. Also, gold is not down all that much, and the bond market is actually up right now. I'm hoping it'll stay that way. If the bond market can stay up, and if S&P can start coming back up to the 100-day moving average, we may have a rotational day. What I don't like is the fact that we just broke the 100-day moving average. Okay? All right. I'm going to give you stocks that I like to the downside and to the upside, and then I'm going to give you a little something that I promised I would do on Friday. Caesars. Look at this compression breakdown. Be careful with stocks to the downside and upside today. Be careful. We broke the 200-day right here. What else can I tell you? Wait for follow through. Don't buy pullbacks. Philip Morris. Be careful. We have the 200 right here. ACGL. Nice breakdown. Already broke this level. Make sure don't sell strength, sell weakness. Okay? Don't sell strength, sell weakness. Autodesk. First time we're talking about this stock here. First time. Already down 3.4%. Yes, I gave this as a bonus many times in many programs. NASDAQ. That's when NASDAQ is going down and breaking the NASDAQ is breaking the 100-day moving average. It's not a good look. When NASDAQ is, and look at how clean this trend is. No bounces. Look, no bounces. We like no bounces. It's breaking the 100-day moving average. Targeting options still the best idea. Yeah, you could still, yeah. Options are becoming more liquid, actually. AES. These are nice shorts. I would stay away from. I don't even know why this one got on my list. Oh, hold on. Maybe I know. I know why. Hold on. No, forget about this one. It's wrong stock. KDP here. Maybe this one. This is the stock that I wanted to show you right here. AES, not AES. This stock, not AES. This is the one. This one, KDP. Consumer staples look like crap right now. Johnson Johnson, healthcare's, I'm not expecting healthcare to do anything really that great with Trump. He's not really as bullish as Democrats on healthcare, which is fine. Nice trend without any major pullbacks. CP&G. Remember, you're going to look at how the stock is doing before now. You want to see how much. See, this one, it had couple of wicks. It had a couple of gaps. Not as good as the other ones. The other ones were nice and smooth like this type of trend. A little overextended, so you want to make sure it breaks down. Now let's look at upside. I would be careful right now. I would wait for the stock to be above 116. I wouldn't be doing anything right now. IRTC. They downgraded their forecast. What a surprise, right, Carlos? This stock is looking really nice. It may be choppy, though, today. VST, this is a utility stock. This is one of the fastest gaining stocks of last year, by the way. It's still looking really good right now. Make a little note here. I've been talking about this stock for the last few weeks now here on this show. I still like it. I would probably wait for a little pullback to this level, but I still like it. AS, I have been talking about this stock for a while. Be careful. We want to wait for it to come back up to this level. This is all right now. Forget about this stock right now. Forget about it. This is brand new. I didn't see this. I was seeing this right here. We don't like this. This has to be reversed immediately, and it has to come back up here. So forget about this right now. If you guys are looking for bargains, I can't help you. LRN. What a trend, right? Look at that. How about this stock? Does anybody remember this stock? Does anybody remember this stock at all? We closed it already. You could talk about it. It's okay. BBAR. That was our trade from the pit last week. By the way, speaking of the pit, let me give you a quick report card. So last week, Mia was the featured trader. That's Mia right there. You could see she's very excited. On Monday last week, we went long IONQ, took a profit. If you swung it, you would have done better. On Tuesday, we shorted Adobe. If you would have swung it, you would have done even better. I gave you a SPY bonus trade, which was a disaster. On Wednesday, Mia gave you CLS, the stock I just showed you a minute ago. We made profit, and if you close it out with it was a swing trade. We closed it out with Friday on a profit. Thursday market was closed. On Friday, Mia, we gave you guys a bonus STZ trade that killed it, literally killed it. And I gave you guys a bonus SPY trade that killed it too. That didn't kill it, did okay. Didn't do. But overall, we had one loser on a bonus SPY trade in the beginning of the week last week, and that was the only loser we had in the pit. All right. Now, I wanted to go over something with you. It was a pit stock. Yes, it was a pit stock. So now, let me really quickly here go over. Now, I'm going to do this very, very quickly. I'm going to do this very, very quickly. One second. I'm doing this because I was asked to do this, and folks really, 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 really wanted me to do this. And I'm also going to give you a link. So one second. And here's the link for this. If you guys are interested, here's the link. All right. Now, before we log off, I have something very important I want to share with you. Just a little over 5 years ago, an unusual pattern jumped out from my list. And ever since then, I've been unlocking weekly turnarounds, all by placing a special trade on Monday. And guess what? Today is Monday. Our results so far, we've had 96 trades. We've had an 80% win rate on live trades, on 96 trades. And in the last couple of months, we've been on a hot streak. We've had 10 winners in a row, each with solid returns, which could have led cash to your accounts, $9,000 in profit in roughly 2 months. And it all starts with random lines discovered, closing within a week's time. Take a look at Home Depot. Back in July, the stock looked to be making a comeback, more than 10% from lows. On Monday, July 18th, the stock market had negative news. Stock market loved the update. Stocks tumbled as earnings pick up. The entire S&P took a bath. Home Depot was down nearly 20%. Negative economic news may have been a good reason to sell for everyday traders, but we had a Monday turnaround going on. And folks, today is Monday, and the market is down. Okay, guess what we're going to be doing today in the afternoon? Options made 43% in 5 days, and a lot of folks wouldn't have gotten this opportunity on Home Depot. But thanks to this sheet, it gave us a great setup. And all you had to do was place a trade on Monday afternoon, close it out within a week's time. All in all, and I'm going to be very quick here. I'm not going to take a lot of your time. Dozens of noisy news events plaguing your decision every day. Simply by following the true trend behind weekly turnarounds, the secret is to take advantage of the only market force I know of that's been proven time and time again, including this worked since 1927, this pattern that I'm talking about. It worked in the Great Depression, World War II, stagflation, the dot-com, even the bear market, the COVID, all of it. Let me tell you what other strategies do you know that beats that? All you need to know is find a true trend on Monday before it closes, and that's exactly what the system does. And the reason I'm doing this today is because it's Monday and the market is closed, and we're going to have a juicy one today at 3:30. You avoid earnings within 2 weeks. You focus on stocks in the top 5 sectors. You aim at stocks with very strong relative strength. You use a filtering system for a shallow pullback. And we don't have time to go into all of this right now. But we find the best, strongest stocks that are taking a little bit of a break Monday afternoon, like Marathon. On Monday, September 26th, the stock looked bad to the average Joe, but the true trend looked really good. The 330 price was way, way below Friday's close. To the modified RSI, not 14-day, 2-day RSI, was below our buying level. No earnings, strong sector, strong stock, and it's Monday, folks, and 330 is not that far away. We had a true trend. By Friday, options were up over 100%. Right now, I really don't know if there's a better time than this, and it's Monday, and the market is down. We've seen an 80% win rate. When I was researching this, I wanted to be 100% sure it wasn't a bull market trick, so we tried it in all different market cycles. I tested it when the S&P was above the 200-day moving average, and the S&P was below the moving average, and each time we had a very positive profit factor, all right? And live trades. We've actually did better on live trades than we did with the back test on 96 trades, okay? And that's why, now, have you ever seen a program do better with live signals than back testing? And we did that over 96 trades over 2 years. And today, you could start, if you haven't gotten into this, I'm doing something really cool. I'm going to give you 4 trade alerts every month. They're going to happen at 3:30. They're designed to take advantage of the weekly turnarounds, and you'll never have to guess how it's performing. There's a members area. That's what it looks like right now. That's our track record right now. Those are the last 10 trades. And I'm going to give you a master class to show you exactly how I do it. I'm going to show you how I trade options with it. All of that stuff is there. And I'm going to give you a 14-day money-back guarantee. If you're not happy, and now this pattern goes back to 1927, and usually I sell this for 1997. I'm going to do something really, really crazy, and I'm going to give you something that I've never done before. I'm going to give you a 95% discount. Today, you're going to pay $97. $97. $97. Here is the link. Take advantage of this. Do it now. Today is Monday. We're going to have a trade come out at 3:30, 3:35 today. Don't delay. Don't delay. Now, if you have any questions, if there's anything that I missed, let me know and I'll help you. This only trades to the long side. It only takes 1 trade a week. These are the actual performance numbers that we have in our members area right now. And I cannot wait for you to take advantage of it. The average trade lasts 4 days. The win rate is over 80% on 96 trades. 96 trades, not 5 trades, 96 trades. Here you could see how the options did, and here you could see how the stocks did. So for every dollar you risk, you make $1.62 or $1.69. Very good numbers. Very, very solid numbers. And I want you guys to take advantage of it. Not for $19.97, but for $97. All right? All right. Take advantage of it. Do it now. Now, folks, this deal is not going to last for more than a couple of more hours. Yeah, $97 for 30 days. Now, I'm not doing this for my health. I'm doing this because I want you to get in on this deal at the best price possible. All right? Take advantage of it, and I'll see you guys later. Have a fantastic day, okay? Still holding final 10% CLS, took profit at different levels. Nice, nice. All right, guys, have a beautiful, beautiful day. I hope you take advantage of it. And if you have any questions at all, not customer service questions, roger@rogerscott.com. And here is the link to Customer Service Live. You can go there, have Cam help you. And again, here is the link for this. It's $97. Will you be giving away trades in that too? I always give trades away. I'm always giving trades away. I love True Trends. If you don't have it, take advantage of it for a spin. Yeah, I mean, you're not going to get a premium service like this. I'm giving you, instead of $19.97, I'm giving it to you for $97 so you can get your account up over the next 4 trades. All right, guys, I'm going to work. I'll see you later. Have a fantastic day. I'm going to be doing another class at 10 a.m. So I'll be back. Today I'm taking advantage of the slow market. Yep, $97 for 30 days. Taking advantage of this special. Take advantage of it right now. Take advantage of it right now. There it is. All right. Bye, guys. Have a fantastic day today. I love you all. Bye. Bye, everybody. Have a great day. Sign up now. It's the last chance you'll get. Bye.